Today in the crypto space, we see the market nice and green, Bitcoin at about 28,600, up approximately 5.5%, and Ethereum back around that $1,600 mark, up approximately 2%. The rest of the crypto space, the altcoins, there are some really good gainers today. Look at Solana up 10% and a few others, but today I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one altcoin that is looking really bullish. However, guys, should we be protecting our gains? And that project is called ATOR. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click that bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. All right, guys, let's get going here. What do we see here with this market? We see Bitcoin, getting a nice little bounce to the upside based on some fake news. That ETF, that we've all been waiting for. It was supposedly happening, and of course, they took it right back. And we're still seeing a bit of that bounce to the upside with regards to Bitcoin, doing its thing, and it did pull back significantly in the last little while. So, we could expect, potential continuation or a bit of a retracement. It does look like a blow off top type of scenario based on that pullback. We'll take a look at Bitcoin as a leading indicator. And of course, we're going to talk about ATOR. Today, the video is about ATOR and to see if we should be scaling it now, or should we be waiting for a retracement? Of course, guys, we are very hesitant when we see those green candles because at the end of the day, we don't want to be exit liquidity, but also we want to make sure that we have enough skin in the game so that we can capitalize on any momentum to the upside. And of course, we're preparing for this bull run and we're looking for these opportunities, and ATOR could be one of them. Okay, so definitely looking throughout this market. Solana looking pretty healthy, up 10%, give or take. And if you continue going through this market, you can kind of see like there's some good gainers, good gainers, but really 10% for Bitcoin Cash, 2% here and there, 2% here and there. So it's not bad. Some good gainers hanging around. Caspa 4%, looking good, but still within range, not really breaking out too crazily. But you got to understand what the catalyst behind this pump was fake. So what does this really mean? Does this mean that maybe we got some exit liquidity and maybe now we're going to be coming down again? Is this possible? Especially when you get these fake pumps, they're just fake outs. They're just, fake outs based on fundamentals. Now, this could also mean that we're becoming desensitized to this concept of waiting for a spot ETF. Maybe the market is pricing it in already. So when we actually get one, we're not going to get the reaction that we expect. So this is all potentially a possibility. And for me personally, risk to rewards needs to be considered here. Getting in on this price action, given the volatility, it presents a bit of risk. So be careful here, guys. Let's continue going down, and we can see, generally speaking, everything related to Bitcoin is pretty strong right now. Render's looking pretty good. Render's back at $1.84. Not bad. Getting a small pullback. I was thinking about talking about Render today, but you know what? I decided to talk about ATOR, just given the fact that ATOR right now is getting some good hype and some good momentum. But definitely I put a Render on the list for tonight. Live stream, guys, feel free to join me tonight at 7:30 Eastern. Guys, we can talk about all kinds of projects. If you have any projects that you're interested in, that's a great time and place to make those requests. Let's begin. Let's continue. We can see a lot of projects doing pretty good, a lot of the momentum's to the upside, but some of them are just around 2%. Some randoms going pretty good, like Rollbit up 6.5%. So if you're in these projects, you got to make really good decisions right now. Do you think this pump is going to be sustainable? Do you think this is going to be a continuation? Do you think they just woke up the bulls here? I'm not sure, but I can tell you that there's a momentum shift potentially in the works. So let's be careful here and take it day by day, especially using Bitcoin as a leading indicator. There's not much that Bitcoin is offering us in the last little while other than what happened today based on the fake news. All right, guys, I know you're here to talk about charts. Let's begin. Let's take a look at Bitcoin first, and then we'll take a look at the ATOR chart. What's going on here with Bitcoin? Of course, we got that nice little green pump to the upside, and then we got a bit of a rejection. A quick wick to the downside, and we didn't even make a higher high here based on this previous high, which is totally fine. But we did make a higher local high. Basically, breaking above this high is something that a lot of us we were looking for. That was a bit of a confirmation that maybe this trend is going to continue to the upside. But what about momentum? What is happening with the bullish momentum? Let's take a look at this in a little bit more detail, because I think this is actually more important than anything else right now, is to be tracking what Bitcoin is going to be doing. Because if Bitcoin collapses here at this level, it's not healthy, especially after a layer of injustice. Let's put it this way. This pump was actually a fake-o. That's basically what it is. And you can see right now, based on momentum, it didn't even make a higher high on the RSI, even though the price action in fact did explode to the upside. Now, I'm aware that the RSI is a lagging indicator, that it does take time to actually register the price action, but we did get some registered in, and you can see that as we speak here on the daily, we didn't even break out of the previous highs, and we got a quick rejection on that price action. So how is that going to register in fact with the RSI? Does that mean that we're going to come right back down and potentially lose some credentials, lose a little bit of faith or confluence with what we anticipate, especially with a nice pump that we supposedly got? So this is something to consider, that it might just invalidate this pump altogether. The volume did come in just a little bit. It wasn't great, it wasn't spectacular. You look at the previous time we got a similar candle. In fact, this candle with regards to volume was a lot bigger. Let me zoom in here a little bit more. You can see based on price action, this candle right here on volume is bigger than the one that we just had, and look what happened. It barely did anything. In fact, look at this. Like, it got a huge wick, huge retracement, volume came in and volume came right back out, guys. So for me, the class A bearish divergence is following through, in my opinion, still based on these two tops. But now we got this to contend with. Do we actually introduce a new TA based on what happened here? And it's still still a divergence. We got higher highs on the price action, double top on the RSI. That is class C. But then again, we have to understand that this is pretty much a fake out. How much value do we offer to this pump right now because of it being a fake out? So what we got to see right now is this. Is the momentum on the daily on Bitcoin actually going to get into overbought scenarios? We've been talking about this on the channel in the last little while, that the risk right now getting into a fresh short, basically going short here on the market, was that we actually see the momentum get overbought and the price continue to the upside, and that would get you wrecked going short. But if you went long, okay, fine, you got into a good long position if you happen to buy this bottom. But now, is this going to be sustainable? Are we actually going to continue here based on this news and the fact that they retracted the news so quickly? And, maybe the sentiment might get, a negative reaction here. So this is something to consider. Guys, personally, I'm backing away from trading Bitcoin. It's not something that interests me right now. Look at this volatility. Look at the uncertainty. Yes, we got a bit of a jitter here, but you can see how big of a manipulation this is. And at the end of the day, I don't want to be a part of it. At the end of the day, I don't want to be exit liquidity in both ways. Both longs and shorts today potentially got wrecked. And this is the thing, looking for exit. This whipsaw, straight up, straight down, whip, and people get wrecked in either direction. We got a bunch of liquidations, a bunch of exit liquidity today. I think it's I forget the number, but I did tweet about it earlier on, but a significant amount, guys. So this is the thing. You got to learn from your lessons. Try not to be that exit liquidity. Look for good value propositions and good buy the dip opportunities so that you can mitigate that risk. All right, guys, let's take a look at the project for today. Not going to spend too much time here on Bitcoin. Of course, that is ATOR. ATOR looking really healthy, guys. We've been covering ATOR on the live stream a while back, in a couple of nights in a row. Actually, for about 2 weeks now, we've been talking about ATOR. And I still stand with my thesis. At the end of the day, this thing has been running up pretty good, within a nice channel to the upside. It's slowly broadening, okay, which is something that we gotta understand, that generally speaking, broadening wedges or these types of channels, eventually they need to lose their momentum. It can't be sustainable forever, and the trend is your friend until the end. But then when the end is here, you got to be quick to realize, okay, maybe we're done with, maybe I need to start protecting my gains. Now, if you're an early investor and you bought the dips at 14 cents, let's say, is this the right time to take profit? 100%, because you've made some great gains. Protect yourself, put a stop loss, trail up a stop loss, put it underneath some good levels of support. Do something, because the market might want to take it back from you. Now, if you bought in here, you're still up. If you bought in here, you're definitely up. And this is where we started analyzing and potentially looking for long positions. And this is where I mentioned, guys, this is not a bad time. And this is where I got that yellow line in and said, hypothetically speaking, let's say we do get that bounce based on the divergence that was happening, not on the daily, it was on the 4-hour. Okay, and we'll get into the 4-hour in a second, because the daily basically showed that the price action was taking a break on the chop zone. Basically, looking at the RSI, where we were in the chop zone, the 50% mark on the RSI is the chop zone, is where usually we take a break and we get a continuation to the downside. But since we were in the chop zone, I said, you know what? Let's go take a look at the 4-hour if we can get into a short-term trade. And this is why I got interested, and I figured that getting around the previous high, double topping, may be an opportunity to basically de-risk, to consider yourself an individual that are in some good profits, and then look for a pattern. But guess what, guys? This thing kept on going. It kept on going with good conviction and good strength to the upside, and this is what we've done in the last little while. So this is why it's important to also consider never completely exiting your entire position. Scaling in and scaling out is the best way to do it. The same way you DCA in, you DCA out. So taking a bit of risk off the table right at this level at about 75 cents was absolutely healthy. We didn't get much of a retracement. In fact, at this point, we went straight up and we hit that 1.27 extension level, which was respected, right? Because a lot of people use these levels in their trading strategy. 1.27 hit. We got that retracement, we back tested, we hit the previous high, got some support there, got some support off the 20 EMA, and got another bounce to the upside. Here we go. And guess where we got rejected again, or we're hesitating currently as we speak? We are hesitating at the 1.618 extension level. And the reason why extension levels become very important right now is because we're in price discovery. We don't have any price action looking left to kind of show us the way. Where is the supply and demand? There isn't really any. We're going to rely on the current price action and basically Fibonacci theory to suggest that psychologically or even inherently, the behavior wise, we can expect that people will start to de-risk and protect themselves at 1.618 extension levels based on Fibonacci theory. Now, if that holds up, guys, this is a very confluent zone. So let's put a horizontal here to just say, look, right now, based on where we are, we have some theory here. We do have a thesis that we could build, okay? Look at the volume. Volume keeps on coming down. Even though we did rally up, the volume is very low in comparison to previous price action where we did get the movement. Now, you got to anticipate that all this volume just basically was the volume that allowed this thing to catapult to the higher levels. And as we keep on going up, the volume keeps on coming down. And little by little, we're losing strength. Now, it doesn't look like it. It doesn't look like that. But you can see that the momentum of the volume is slowly diminishing. Now, speaking of momentum, what is the RSI showing us? Honestly, the RSI on lower time frames could be showing us a bit of negativity. Let's look at the daily here for a second. Look at these two tops, not very healthy. Okay, lower lows on the RSI, higher highs on the price action. Just based on the daily, that's class A bearish divergence. We got to be clear about that at the 1.618 extension level. Now, a lot of us might be saying, but Fibonacci's and extension levels, fine, they don't work out always, they continue going, very true. And divergences also get invalidated, very true. But when you have confluence, you start to add to your thesis. You start to believe in statistics rather than faith-based system. We're starting to say, well, the probability now that we have two indications here might increase the chance that we might roll over very soon. Okay, now we also have some indications here on the MACD. Let me put a line here to just acknowledge the fact that the momentum on the RSI is downward sloping. Okay, we can see that based on the chart that we can see here, downward sloping. Okay, as long as we don't make a higher high, we're going to maintain this class A bearish divergence. Okay, now look at the MACD, very similar concept. Look at these histogram bars right now, the way the clusters are formed. Okay, they are this one right here, it looks like it's going to close smaller. Now, of course, I'm staying one step ahead. Anything can happen here. We can make this trend, in fact, go upwards by just making a bigger cluster right here. But I'm trying to keep you one step ahead of the market here, guys. Whatever happens in the next 24 hours, let's keep an eye on ATOR to see if this bearish divergence actually follows through, because this could be the opportunity to start de-risking, given the fact that we've been basically in an expansion phase for so long. So what happens now? First of all, let me get rid of this because this is in the way and it's done. We've entered here. This was the time to enter based on the previous lows. A great risk to reward. And we'll go into the 4 hour in a second. Now, we're seeing bearish divergence, bearish divergence, bearish divergence pretty much on both momentum oscillators, including the volume. Okay, volume is coming down even on these two pegs right here, coming down volume while the momentum is moving up. Now, if you get into the 4 hour, you're going to see it a little bit more in the sense we got a couple touches here and you can see that the momentum is falling as the RSI comes down. You can see the price action keep on going up, and the MACD stemming from here is not as clear, but these two are. So these two tops, higher highs on the price action, lower highs on the RSI on the MACD. And the MACD right now, EMAs are facing down, red histogram bars to the downside, and the RSI is getting a divergence here too very clearly. Okay, so this is the thing to understand, is that this thing is already consolidating really top heavy while we're getting bearish divergence on the daily and on the 4 hour, and this could potentially be a scenario where we see this thing roll over finally. Now, if you're going to get in based on only the 4 hour conviction, yeah, I would be quick to take a bit of profits at previous lows. Understand that we do have a volume gap right here that could propose a bit of weakness going forward, and some support levels to watch out for. So I'm going to be putting a box right into here to show you what I mean, and I'm going to put some diagonals. This is the level where we can anticipate some support right here. Boom. And if we fall below the volume gap, right through the volume gap, because there's very little supply and demand there to act as support, we definitely start hitting the lower levels, and that's another level, which is between 71 cents and 65 cents, more or less. Okay, and if you look at the confluence that we have with this retracement, we have the golden pocket 618. So we're at the extension level golden pocket, and a retracement down to the regular golden pocket 618 as a retracement is definitely viable. We have previous price action, this cluster, this top, a bit of price action here to act as support, and this is what we're banking on, the fact that we can come here and maybe even fall a little bit lower and hit this zone. So I'm liking these zones for buy the dip opportunities personally. Okay, so I'm going to put a few arrows in there so that we can keep the strategy accountable. One thing that I also want to note is that 200 daily. The 200 daily, we got to get on the daily time frame. On the 4 hour, we see the 200 EMA kind of just hanging out there, trekking to higher levels, trying to catch up to the price action. So we'll see what happens with the 200 EMA on the 4 hour in the next couple hours, the next 24 hours, the next 48 hours. But right now, as we speak, guys, we're at a good level. We're definitely hitting that 1.618 extension, swing high to swing low, and got that impulsive move to the upside. Am I expecting a retracement soon? I would be taking profits, anticipating that this thing eventually rolls over. Shoulder, head, maybe come down, get a bounce, create another shoulder, hit that 1.27, and then roll over, create a structure where we have a nice clear invalidation, a nice clear neckline where we start breaking lower levels. And then if you start zooming out again, guys, this thing has been running up significantly. It's time to understand that the market's going to be looking for exit liquidity. No matter how bullish this project is, retracements are always there. There are opportunities to buy dips at lower levels. The bigger impulses are always followed by bigger retracements. Big impulse, small retracement. Big impulse, small retracement, but big impulse, small retracement. Right? It could happen. You get what I mean? So you got to zoom out and look at big picture. If you consider this entire move as a big impulse, we are due for a small retracement, and a small retracement can get you down to about 40 cents, maybe even a little lower. So what we're going to do is we're going to take it day by day and wait for the daily to get fully reset to oversold scenarios. We want oversold conditions. We haven't even gotten there yet on ATOR. So it is due for the market to hunt some liquidity and get down to these levels to get some people wrecked. Guys, this is where the markets work. It's unfortunate, but they hunt liquidity for people that are, retail traders, people that are not understanding how the ebb and flows, the peaks and the valleys are formed into the price action. And the last thing you want to do is fall into the hype and the FOMO and just basically buy the tops. Now, again, tomorrow we could wake up and this thing could be at $20. Who knows? But statistically speaking, it's not very healthy to get into a green candle. Now, another thing that I'm noticing here is that you have the $1 level. I just want to bring that to your attention as a very psychological level. You know, people are looking at that $1 level as a potential top. You know, it's an easy number to put into an exchange to take profit. It's a very good number for your mind to make sense of it with math if you're trying to calculate profit and all of that. So this $1 level might be that zone. Front run it, guys. Don't wait for that $1 mark. Take a bit of profit early just in case. If you're in some deep gains, you definitely want to take some off the table, because that's the way you become a profitable trader, taking profits, because then the market will take them away from you, and a lot of the times they hit your entry levels. All right, guys, thank you for stopping by. I'm going to be live tonight at 7:30 Eastern, where we talk about crypto news and price action. Of course, feel free to join. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord. The Discord's a great community, lots of good alpha, trade setups, fundamentals, and all that good stuff. Take care, guys. Have a good one, and don't forget, buy the dip.